Penny stocks can sometimes feel like shooting in the dark, but every now and then, there are hidden gems that have the potential to explode in value. These are the kind of stocks that turn a few $100s into tens of thousands, or even more, if you catch them early. We're talking about companies in cutting-edge industries, solving massive problems, with strong institutional backing and genuine scientific breakthroughs. In the world of healthcare, this becomes even more exciting because we're not just talking about profit, we're talking about improving and saving lives. So today we are diving into 2 penny stocks that have the potential to make you rich. These aren't random or speculative plays you stumble across in a Reddit forum. These are fundamentally strong companies backed by top-tier analysts, reputable hedge funds, and promising product pipelines in the biopharma and biotech sectors. Their work is reshaping the future of kidney disease treatment, drug discovery, and biologic manufacturing. These are the types of stocks that smart money is watching closely. And if you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. Let's start with the first stock, a company that is doing groundbreaking work in drug discovery and biotechnology. Biotech SE, trading under the ticker EVO on the Nasdaq. This is a German-based biotech company that operates globally, offering both contract research services and its own drug discovery platform. Biotech's mission is to discover, develop, and deliver highly effective therapies that target unmet medical needs. The company operates through 2 main business segments. The first, shared are /&D, collaborates with pharmaceutical and biotech companies to develop new therapies. The second, just Biotech Biologics, is focused on the development and manufacturing of biologics. What makes Biotech particularly exciting is that it's not just a service provider. It's also deeply integrated into the R&D process and is building a proprietary pipeline of potential breakthrough therapies. A major catalyst for Biotech stock is its recent participation in a groundbreaking initiative called the NUR2REKI Consortium. On June 25th, the company announced it would be joining forces with AstraZeneca, Nephrolix GmbH, and other industry players to form what will become the world's largest patient cohort database for acute kidney injury, AKI. Backed by £4.7 million in funding and facilitated by Kidney Research UK, this consortium is aimed at better understanding AKI on a molecular level and advancing drug discovery through sophisticated multi-omics technologies. Professor Nick Selby, one of the leading experts in kidney research, is overseeing the project. Biotech's role in this consortium goes far beyond just writing a check. It will integrate the NUR2REKI data into its own proprietary ED-MPD platform, an advanced bioinformatics and data integration system designed to identify biological mechanisms and novel drug targets. The company will apply its expertise in omics analyses to extract key insights from patient data, with the goal of accelerating the discovery of highly targeted, effective treatments. This means Biotech isn't just along for the ride. It's in the driver's seat, helping shape the future of how we treat kidney injury. Now, let's look at the numbers. As of Q1 2025, Biotech reported €200 million in group revenue, a slight decrease of 4% compared to the same period in 2024. This was actually in line with expectations given the softer overall market environment for drug discovery services. The decline was mainly driven by a 9% drop in external revenues from the shared R&D segment, which brought in €140.6 million. But the good news is on the biologics side. Just Biotech Biologics delivered an 11% year-over-year growth, with revenues rising from €53.5 million to €59.4 million. Adjusted group EBITDA was €3.1 million, a dip from €7.8 million the previous year, but still slightly ahead of plan. This was thanks to efficient execution and favorable phasing of work packages in the biologics division. What's especially exciting is that the company is on track for a much stronger second half of the year. Biotech's full-year 2025 guidance anticipates revenues in the range of €840 to €880 million, up from €797 million in 2024. Adjusted EBITDA is expected to rise significantly to €30 to €50 million, compared to €22.6 million last year. R&D expenditures are also expected to fall slightly, giving the company more room for profit margin expansion. Aside from its involvement in the NUR2REKI Consortium, Biotech has continued to land major deals and funding milestones. The company received a $75 million milestone payment from Bristol Myers Squibb for achievements related to the development of high-value molecular glue degraders, an emerging class of therapeutics for diseases with limited treatment options. In another exciting development, Biotech secured a grant from the South Korean government to pursue antibody-based treatments for lung diseases. All of this illustrates the company's growing influence not only in Europe, but also in Asia and the U.S., reinforcing its position as a global player in the biotech industry. At a current stock price of $4.20, Biotech represents a compelling buy opportunity. According to 3 Wall Street analysts, the average 12-month price target for the stock is €10.07, or about $10.84. That's a 41% upside from where the stock is trading now. With a low target of €7 and a high target of €11.90, there's room for potential upside, even in more conservative scenarios. Plus, with hedge fund interest already beginning to pick up, one notable holder reported as of Q1 2025, it's clear the smart money is starting to pay attention. Now let's move on to the second healthcare penny stock that could be the sleeper hit of the year, Akebia Therapeutics, trading under the ticker AKBA on the Nasdaq. This biopharmaceutical company is focused on developing innovative treatments for kidney diseases, and it's already commercializing 2 key products, Auryxia and Vafseo. Auryxia is used to manage phosphorus levels and iron deficiency anemia in chronic kidney disease patients, while Vafseo is a recently approved oral treatment for anemia in CKD. What sets Akebia apart is its focus on a specific yet highly valuable niche, chronic kidney disease, and its ability to roll out new therapies that meet unmet medical needs in this space. The big story with Akebia right now is the launch of Vafseo. According to CEO John P. Butler, the drug generated $12 million in net product revenue in Q1 alone, marking one of the strongest drug launches into the dialysis market in recent years. This is especially impressive considering the tight regulations and reimbursement challenges in the space. Vafseo is already being adopted by small and mid-sized dialysis providers, and the company is ramping up efforts to expand adoption among larger players as well. The drug's oral formulation makes it a game-changer, offering a more convenient and potentially more cost-effective alternative to traditional injectable anemia treatments. Akebia has also been actively expanding its team, with new hires and stock option grants being issued as part of their growth strategy. On May 30th, 2025, the company granted options to purchase 137,000 shares to 3 new employees at an exercise price of $3.03 per share. This follows another grant of 148,000 shares in April to 8 new hires. These moves indicate that Akebia is aggressively scaling and investing in human capital to drive future growth. As for the financials, Akebia is in a strong position heading into the second half of 2025. While full financials for Q2 haven't been released yet, the early success of Vafseo has the company confident in its ability to reshape the treatment landscape for anemia in CKD. Auryxia continues to deliver stable revenue, serving as a dependable cash flow generator while the company builds out Vafseo's market share. With both products targeting a chronic condition that affects millions of people worldwide, Akebia has significant room to grow, especially if Vafseo becomes the new standard of care, as the company predicts. At a current stock price of $3.64, Akebia is flying under the radar, but not for long. Analysts are extremely bullish, with a 12-month average price target of $7, representing a potential upside of nearly 92%. The high estimate is $8 and the low is $6, which means even the most cautious projections see significant room for growth. In addition, the company is seeing strong institutional interest, with 19 hedge funds holding positions as of Q1 2025. This level of attention from institutional investors adds credibility to the company's trajectory and should boost investor confidence moving forward. Well, that concludes our list of 2 powerful healthcare penny stocks with explosive growth potential. If you found this video helpful, don't forget to like, subscribe, and turn on notifications so you never miss the next big opportunity in the stock market. Thanks for watching, and we'll see you in the next video.